for every one of you, I think there's 99 that bankrupt themselves. And when you look at small caps, to me, these are the companies that have that 10, 20, sometimes 100x potential. Like these are the companies where you find those unicorns.
That's what I see for the next 3 years, because like we went through this contraction of money supply to now expansion. So you're going to have money flying into the risky assets.
So we have a lot of good catalysts, a lot of things running up to hopefully drive some more momentum. And the only thing I'm going to regret is probably not owning enough of it.
Welcome everyone. This is Mariusz Konieczny. Today, special treat. I'm chatting with Kyle Livingston, who is a YouTuber, passive income investor, and some of you already saw him because we share a couple investment ideas. So Kyle, thanks for doing this.
No, a pleasure for having me on, man. This should be a pretty broad conversation. I'll let you kind of lead it in whatever direction you want to go with, anything from small caps to large caps and ETFs in between. But
yeah, I don't have any questions, but I know enough about you that I can come up with them right away on the spot. So yeah, we share a few. We share one specific investment. We shared a couple others, but I never really got a chance to talk to you about, like, you know, what is your investment style? Like, I don't really know. I know you like to talk about banks, dividend paying stocks, but where do you sit in talk to me about your investment strategy.
Yeah, I think I'll framework it from the YouTube perspective, because a lot of people that follow my channel obviously see a lot of Canadian stocks, a lot of dividend stocks, things that drive the traffic, as mentioned. Like, I'm going to talk about what people are most interested in lately. It's been a lot of tax strategy as well. But people that follow the channel enough see my portfolio and what I discuss. And I'm mostly advocated toward where I expect the best growth potential to be, which is obviously in the United States, still, regardless of geopolitics. Just because, like, I mean, you can't help but recognize like some of the discounts that I think are there with Google and some of those companies. But regardless, my primary strategy that I've started, I mean, you've been around the block, I think, a lot longer than I have. And I think everyone has to figure out what works best for them. Over the last 10 years I've been investing, I've realized that I'm pretty good at, you know, finding investments that I think have the value, allocating them correctly. I'm not as crazy as some people out there like you that have a way higher risk tolerance. And I'm just trying to squeeze out a few extra percentage points because, you know, to me, I'm looking at compounding over 20 or 30 years. And if you can just make an extra 5 or 10% on top of index returns, like that, you know, can get absolutely extreme without taking on too much risk. So what I like to do is find those investments, you know, look at a 3-year time horizon at least. And if things work to my favor, I'll you know, take profit as the rallies happen, just in case, you know, you get any kind of market events, and start allocating that toward, you know, longer term, what I would consider more wealth preservation investments that can yield anywhere from like usually 10 to 14% in cases like the index funds or even like broader Canadian ETFs.
But so how is your portfolio structured between the Canadian equities and the US equities?
It's very small Canadian. I mean, a lot of people say like I should just be buying like a global market funds because they allocate similar to how I'm allocating. But right now I'm like balls to the wall US stocks for the most part. I'd have to take a look. I think between the wife and I, you know, just in our combined accounts, I'm sitting mostly like 70-80% US, maybe 15 to 20% Canadian and international. But there's obviously that US also includes, you know, some of those individual companies, which I think we're about 15 to 20% individual stocks, which I you know, depending on your risk, I mean, that could be a lot or it could be a little. I just don't know how people like to gamble in their portfolios, but I'm not the one to tell them how to do that. So
right. And so why do you weigh towards more US? Why not just stick with Canada, since this is where you are?
Performance, man. I mean, at the end of the day, like you can look around the world and I can look at stocks like Alibaba, and there's so many international companies that I think are great companies. But regardless about how you feel about fundamentals and a lot, there's so much more that comes into play with companies. Like, I mean, you have to look at, I mean, there's so much comparable how investors think, because you need the volume there. You need investor attention, no matter how big or small your company is. Tesla's a great example of this. Like, how can a company like Tesla hold the value it holds when a Chinese competitor like BYD is outselling them threefold? So you got to recognize that there's a lot more than just fundamentals when it comes to stocks specifically. And regardless about how you feel, the attention is in the United States. The innovation remains in the United States, especially with the competitive nature of AI right now. So like I said, I just want to look for the path of least resistance to wealth building. And if you can kind of, you're looking for that. For me, I'm looking for a perfect storm usually of companies that have good fundamentals. If I'm trying to make bigger bets, like really large bets, like I am with Google, I like some kind of fundamental backing where I know the company can't just, they can't get eviscerated in any material way because their fundamentals are too strong. I mean, Google has the second largest cash position to Berkshire Hathaway. And, when you look at the value of growth, I mean, their earnings per share is not that far off right now from Meta, but Meta's demanding like a 25, 30 times multiple and Google's down at 19. There's reasons for that, obviously, but I think those reasons don't extend to the value proposition. So I'm hoping in the next 1 to 3 years at least, once we get through the monopolistic fines and this AI battle, which I think Gemini and Google's winning like by leaps and bounds, that like the stock should start demanding that 25 to 30 PE. And I could easily make a 50 to 100% gain on a company that's the size of Google. So that's kind of like the bull thesis when I'm looking at stocks. And again, the US is just, I mean, how do you compete? I mean, you have NVIDIA, you have all these companies, and regardless if they're overvalued or undervalued, there's still massive margin expansion going on. The growth is there. Like I said, it's just geopolitics, I think, is skewing people's opinions. However, I think it's funny that the Canadian markets have actually outpaced the US over the last year. And I still love Canadian companies. I live here, obviously. But again, to me, it's just allocation sets, right? Like I can get a good 10% return off the Canadian markets, but I don't think long run I'll ever see like the 14 to 20% you've been seeing off the US indexes for the last 15 years.
I mean, I personally like the arbitrage. You can invest in something on a more illiquid market, such as in Canada, with the hope or promise that eventually the company is going to uplist to a more liquid exchange like NASDAQ. And we saw a perfect example of what can happen. We both follow Aduro Clean Technologies, and we've seen when it was listed solely on Canadian Stock Exchange, it felt like pulling teeth. Like it's just people were just not interested. And then the moment they uplisted to NASDAQ in November of 2024, I mean, look what is happening with the exposure on social media with Aduro, simply because it's trading on NASDAQ.
Yeah, I have a love-hate relationship for Aduro because I feel like I still don't own enough of it. I took a little bit of profit on it when it ran to 11, and literally the other day when it was at the 890 range, I was like, I'm going to buy more of this. And then literally the next day it went up like 10 or 15% where we sit today. I think these numbers are pretty small though, and regardless, I'm probably just playing a mental mind game that doesn't matter in the long run. But yeah, I think when it comes to the small cap, I mean, that's the same thing kind of happened to Palantir, I guess, when it was uplisting to the S&P 500, because you need to kind of get institutions, right? And they're not going to pay attention to companies that trade on OTCs. So it makes it a bit of a challenge when you're working with those companies before they make that transition and have that growth phase. I love Aduro a lot. My biggest fear with it, and I know a lot of investors want to get rich today, but I want to see them actualize some of the potential before it starts running into a multi-billion-dollar valuation. I think it's one of those companies that's easily going to get there. I just don't want it happening in this moment until we start seeing, pilot plants start getting up and running and offering some ideas of what the scale looks like behind that. And same with even just converting a client or two that they have in that 10 client engagement program. Because that's the always thing, because I want to hold these stocks for the long term. And I'm always going to have a piece of them, in my small cap portfolio, which I don't share as much because I'm not sure how it works for you, but with regulatory, scrutiny and just being careful when I'm trading these stocks around so people don't think I'm doing it on insider news or pump and dumping. I prefer not to like overly publicize them because there's so much heat around these kind of stocks. But I mean, yeah, I love progressive growth because I mean, I've made huge amounts of capital off stocks pulling ahead way too much value. Canopy Growth Corp, the MJ boom, I made a small fortune, but I got out so quick because it just, same thing with like MindMed, some of the 2022 pumps. The only reason I survived those was because I'm like, you can't be pulling forward billions of dollars of valuation before the company even starts actualizing the reality of it. So Aduro's in this nice sweet spot where I really like the 3-year evolution that we've been on. And I'm hoping it kind of continues in this consistent manner. But I mean, I know there's a lot of investors getting really heated. They love seeing the value pop ahead. But I'm hoping we kind of keep leveling slowly over the next 6 to 12 months as they actualize these milestones.
Well, I tell you what, the market doesn't care what you want or hope.
Yeah.
Because I hear this all the time from prudent, responsible individuals. And I'm here to tell you, the market doesn't care what you like, what you don't like. If the market wants something, they're going to get it, whether it's overvalued or undervalued. So with Aduro, it's like anything can go. And especially like right now, if follow the other company, Pure Cycle, now it's approaching $3 billion valuation with all the debt, and they're addressing a smaller market. So it doesn't matter. It does. Aduro can be $3 billion company. Right after the pilot, before the pilot, it's all in the hands of the buyers and sellers, and also if you when I first got involved with Aduro, it was more like I want to be prudent and all this, and I want to see certain milestones hit, but it more opened up my eyes recently. Now there's a different group of companies out there, such as ASP, Space Mobile, or some of these nuclear nano energy, where they have nuclear energy promises, where Oklo, where you have a different set of investors that look at a particular solution, look at the total addressable market, and they just go. And it's just like they have no problem assigning a multi-billion-dollar valuations to companies that don't have any revenues yet, but have great promises, and Aduro, I can see Aduro fit into that,
100%.
into that mold, and they're just going to eat it up. That's why it's like anything can go.
But again, it depends on what kind of investor you're looking at, because now you're kind of getting more toward momentum investing, which is fine. I mean, it's great, especially if you can find opportunities like Aduro. It's just a matter of I always look for the long term, and I prefer, because I get attached to these things. Like I got attached to Tesla in 2019, and I never thought I'd be 100% out of the position, but the best thing I ever did was get out of Tesla. It hasn't done anything for 5 or 6 years, right? Because they just pull forward way too much valuation. And when you run into markets like we had in 2022, and we've never experienced a real bear market, a real black swan event. I mean, just the interest rate and inflationary cycle we went into 2022, I mean, it clobbered investors. And I feel like we're moving back toward this bullish sentiment where you're getting a little bit more gambling going on. And it's the same risk with Bitcoin and all these different assets, is people just don't know what they're going to look like if we do go back into an inevitable cyclical downturn, regardless of what causes it. If people need liquidity in the market, I mean, the first thing they're going to look at is high risk investments that don't produce anything, right? And when Bitcoin's controlled mostly by a handful of investors that really, the whales controlling kind of the price momentum, if those guys ever decide to dip or materially take profit, which you never know, right? You don't know what the price action is going to look like, but I just keep reminding people that I like the market we're in right now. I'm loving a lot of these stocks, but like you, when you look at Oklo, you look at all these different things, they're just going absolutely bananas with no fundamentals running those companies at all at the moment. So they're doing the right thing responsibly. Capital raising, same with Aduro, they're giving themselves a runway at the appropriate time to de-risk the company a lot more for us as shareholders, which I don't have anything against diluting if it's done correctly, which I think Aduro's doing. So hopefully that de-risks it. And I don't think Aduro's going to any substantial run to cause any major concern, because like you said, the opportunity in that sector I think is so grand that so long as they keep actualizing on milestones and building on that the sky's the limit here as far as I can tell. But I don't want the sky as the limit tomorrow. I don't want to see an Oklo like event where it runs up to a $5 or $10 billion value and they haven't even the pilot plant's not even operating yet. That's one of my fears. But again, all of this is happening in 6 to 12 months, right? So we have a lot of good catalysts, a lot of things running up to hopefully drive some more momentum, and the only thing I'm going to regret is probably not owning enough of it. But regardless,
it's a fear. It's a fear because when any position that you have gets into these positions where you feel it's overvalued in relation to the fundamental banking, then it's tough to hold it.
Yeah.
And like you said, you want to hold it long term and you want to feel comfortable but that's just how it is. But also, I recently made a video about the money supply, M2, and if you look at the graph from 1960, I think, the money supply has always been growing. There was sometimes it grew faster, sometimes it grew slower, but it never declined, except after the COVID, because they pumped so much money into the system, paid everyone not to work, all these checks flying around, and then inflation heated up. And so then they actually shrunk the M2, and that's why we had such a hard bear market in these non-profitable companies, and we saw a flight into everything profitable. It didn't matter. As long as it was profitable, it could have been a lemonade stand. That was it. That was the trade. Everything profitable. And now the money supply is starting to grow again. And it's good to be in profitable names. But at some point, if everybody piled into them, it's like, well, profitable is good, but profitable, it doesn't have that acceleration. And now you see that risk is coming back again because of the money supply is starting to grow again, and that's why you see these Oklos, these satellite companies, anything with technology is flying now because that money is risking again. And then I see on social media again, everybody's talking, oh, you're chasing after Shetkos and this and that. I mean, that's what I see for the next 3 years, because like we went through this contraction of money supply to now expansion. So yeah, that's what happens. You're gonna have money flying into the risky assets.
There's multiple tailwinds going on right now that I think are bullish for the market. I actually went a bit aggressive again recently. We did really well through the tariff dip. I wish that lasted a bit longer. I love when the market tanks. Best opportunities out there, but you still got to recognize, even in these bull markets, like they can last a lot longer than people think. But like you mentioned, we're back to new bills that are printing ungodly amounts of money again, which regardless of if it helps or gives tax cuts to the poorer middle class, it's only going to benefit the rich and the investor class, because that's what drives a lot of market with the inflationary tailwinds behind that. But then you also have the interest rate cut cycle that we haven't even experienced,
Right.
and I think that is part of the bull market that has been happening globally, because a lot of people are questioning, like, why are global markets doing so much substantially better than the US markets? And you have to look at money market funds, right, where there's record levels of cash sitting in the United States. People are anticipating that those interest rates are going to start coming. The rest of the world has already started cutting rates pretty aggressively, and all those people in those other countries that flooded money into US treasuries now are questioning, oh crap, our currency is starting to go up against the USD. So now we're losing this 4 to 5% just against dollar conversion. And on top of that, we know those cuts are coming, which is probably only going to amplify this as people start really pulling money out of money market funds. So I think they're front loading some of that, and they're bringing those currencies back into their own markets. And, that's, again, like, global markets have been outpacing the United States by leaps and bounds over the last year, but you notice that it's right in line with the US dollar dropping. Money market funds are still pretty strong, but like you're saying, with the tailwind of printing money, interest rates coming around the corner, record levels of cash still sitting in the market, a lot of that can build up to, shit, where's this money going to go? And it's likely just going to go back into the markets. And, we'll see if we're in a brand new, bull scenario where we continue to see these great runs, but that can only be backed by earnings, right? Which, regardless, earnings have been far greater than I think people have been anticipating. I mean, we've seen pretty good earnings for the first quarter. So we'll see what the second quarter looks like, and that could kind of keep us level off and, investors comfortable taking on that risk. But like you said as well, I think through 2022, there's a lot of turnoff from small caps. And I think a lot of people are alleviating of that risk, as we're seeing it in crypto as well. And, we're seeing the benefit now with companies like Aduro and many other companies out there. But again, you got to be very selective and careful, because
if the money is flowing or is going to flow into the risky sector, well, first it's the good stories, the good technologies, the promising things that are going to attract that flowing capital.
Yeah. No, 100%. But again, like, those stories can only take it so far. Like, I think Aduro, when you look at the share structure, I mean, how do you look at those investments just from a personal standpoint? Because, I mean, you and I have worked with a variety of companies, and it becomes quite clear, depending on how those companies have issued float, on how the performance is going to be in the future. Because if you give too much to institutions, or you give too much to family and friends when the company goes public, you start seeing, like, it's hard to combat even some of the inflows when you start seeing, like, record level outflows. And I've seen that happen with quite a few companies. So you kind of have to analyze them from, like, a whole different perspective when you're looking at kind of like the story fund idea of it, unless you end up in a Palantir situation where there's so much ungodly amount of money pouring in that it doesn't matter how much you dilute or sell shares. Like, you're never going to combat the the inflows. But yeah, it's such a weird different perspective on investing when you're looking at those kind of stocks. But I'd be curious to see what your take is on it.
Well, I mean, I still see Aduro as a mostly retail, smart retail story. We really cannot get into the realm of institutions until we have a minimum market cap of 500 million. So
Yeah.
another double, and that's when we can begin the journey into the institutional uh, players, because they have restrictions as to the market cap before they can involve. Some of them get involved when it's 500 million. Some of them need a billion. I mean, if you take Kathy Wood knows about Aduro. Many people have sent it to them. I sent it to them, but and they would guarantee you they would love to get involved in something like Aduro, but they can't. It's just too small for them. So I think people underestimate what can happen once we reach 500 million or a billion. Simply from the flow of money perspective from institutions, because like we already established that at this point you can't value Aduro based on EBITDA multiple or revenue multiple. You just can't. You have to value it based on what kind of problem it solves, how much of a market share can it get from this kind of perspective. So if you're a institutional money manager, like how could you not want to get involved in something like this? How could you not?
No, I agree. I mean, I'm looking at it here, and I think there's what 36, 40% insider ownership, and the rest of it's mostly just retail.
It's
There's
like 10
virtually
million. It's like 10 million is only available.
yeah. So I mean, the float's tight, and it keeps the stock kind of in this nice trajectory. The stock chart's amazing, right? And you can kind of see it with the float and how it's kind of benefited the. I think they're kind of a prime example of a roadmap for how other companies should operate in the public markets that are trying to excel. But I think the other fun question too is how you structure them in your own portfolio, right? I mean, I'd be curious because I know you're heavy risk on, and we've had conversations like this before. But like I always look at it is, again, probably from somebody that's a little less risk adverse than you are, is like I have the I'm looking always for the path of least resistance to wealth. And a lot of people don't have the level of scrutiny that you do, or level of time to put into the markets, or this kind of research, or let alone having their finger on the button enough to be comfortable trading the kind of volatility that's in these stocks. So I've always looked at it within like three buckets. Like there's wealth preservation, which is your ETFs. You never have to worry about them. They auto weight based on market cap. Over a 20-year period, it's fairly hard, impossible to lose money for as long as this thing's been around. Then you have like what I would traditionally call like Warren. I don't want to say Warren Buffett because his traditional way of investing just doesn't work in this new world. But ideally, companies that you think you understand well enough, that have fundamentals backing them, that again, path of least resistance to inching out somewhat higher percentages of return. Those could be mid to mega cap companies, depending on the cyclicality of news flow. And my trade with those specifically is that because unlike small caps like Aduro, with these mid to large cap companies, they ebb and flow based off what I'm going to call like mutual fund risk. Like look at the Terrafor, even on index funds as an example, right? Mutual funds need to make money for their clients. And when you run into a market cycle where there's too much uncertainty in the future, these mutual funds would rather take that money and put it into a treasury right now. It's getting 4 or 5%. It's guaranteed. They don't have to lock in like these 20% losses. So they were selling into that, but that kind of over projects that loss into the future and really drives the market down in a way that's unjust, because we don't know what the outcome of those tariffs were going to be. And then it happens the same way in reverse, where once they get more comfortable with that risk, the market over projects that back into the future, and they over buy back into those rallies. So you kind of see an over exaggeration to both sides regardless. But as a retail investor, you can really take advantage of it, even from ETFs to individual stocks, because they have the same thing. Like Google is too risk right now, I think, for those mutual funds. So they just don't want to hold it to the level that they were. And it leads to like an over exaggeration of the valuation to the downside. So that's kind of like a level that I look at for those companies. But then when you look at small caps, to me, these are the companies that have that 10, 20, sometimes 100x potential. Like these are the companies where you find those unicorns where, for me personally, I just don't feel you have to put up as much risk because again, the volatility is there. You're not running it off fundamentals. You're not running it off these institutional playbooks. You're just kind of looking at it saying, hey, if this works out and I take on this risk, the potential is 10 to 1,000x. I'm never going to see that off Google. I'm never going to see that off an index fund, but I don't need to take on the same sizing position in my portfolio, because if it does work out to that potential, it could balloon my portfolio massively regardless, even allocating like a 3 to 5% weighting in something like that. So that's kind of like how I look at structuring them, is the risk versus reward. So if it does detriment and you get the volatility to the downside, who cares if it wipes out 2% of your portfolio? It's barely a blimp on the radar when you look at the movements like these ETFs are making on a daily, right? That's kind of how I've come to structure the risk in my portfolio, and I look at allocating that risk. But for somebody like yourself, I'm sure as investors are probably aware if they're following your channel, like I'd love to see. I know you're not like, you're not here really to teach people investing or give them any advice in that aspect, but from your own sense, like how do you look at structuring your portfolio in that way? Because I know you don't even care about ETFs, do you?
No, but you see, what you're talking about is what humans do, right? Lions don't compare themselves to humans. I love that quote. No, you see, here's what a lot of people don't understand. I would say 75% of my Aduro position is not tradable. It's locked. I bought it through private placements, and as you know, in the U.S., when you participate in private placements, you have much more restrictions than you have in Canada. You might have a 4-month hold. In the U.S., we have a minimum of a year hold. And because Aduro was like either a pool company or changed its name, I cannot remove those restrictions until October of this year. So like I have no choice but to hold the majority of this position.
Yeah.
And if you just have freely trading shares, you can make those kinds of decisions. I can't. But that's good and bad, because the good is that you don't have itchy fingers. Right? You have no choice. You have to hold your position, and then if it gets big enough, so big that you're uncomfortable, well, guess what? You can't sell. Right? So that makes it a little bit easier. But also another thing is, I really, it might surprise you, but like, I don't know what my performance is from quarter to quarter. I stopped measuring about 10 years ago. Like, I really don't. And people are like, how can you not know? I don't know. I don't know how I compare to the market. I don't know. And when I did compare myself against the market, 10 years ago, it puts a lot of pressure. It makes you want to do things, because you're always supposed to beat the market. Otherwise, you're a worthless investor if you don't beat the market. But when you remove that you don't know, you don't care, then it just changes your perspective. Like, it doesn't matter if I beat it or not. I don't know. So there is, of course, years where I hugely underperform it, but then there's years where obviously it's so huge that at the end of the day, I just want to make a lot of money, and that's it. So I really, when I joke about humans, lions don't compare themselves to humans, it's a joke, but like, I really don't. I couldn't care less if you make more money than me. I have my positions. I know what my philosophy is, and if the management performs, I'm going to make a lot of money. And if the management fails to perform, then I lose money and I look like a complete idiot, because I put myself out there, and they embarrass me when they don't perform.
Yeah, and I think you're coming from a different level of risk tolerance in that aspect for sure. And I don't know what I could compare you to when it comes to a lot of these growth investors out there like Dumb Money. Because I mean, Chris Camillo is an interesting guy who takes on an exuberated amount of risk. And I'm going to say I know like 3 or 4 investors, maybe similar to yourself, that come from that level of risk tolerance, that take extreme options trades. Like I've seen these guys bang like $2-3 million out on a single trade. But again, like I really think you kind of have to be morphed into that through like a lot of circumstance, and you have to be willing.
But I don't gamble. I never gamble. Like,
Yeah, but it's assessed risk, right? I mean, it's all gambling at the end of the day, regardless. I mean, crossing the street is gambling, so it's just a matter of, like I said, when I mentioned for most people the path of least resistance, like I don't necessarily think like I'm personally like the benchmark for me, regardless, like I mean, it depends on what you're trying to do, right? Like you want to make an ungodly amount of money, and you have your pattern toward doing it, and that comes with a lot of ups and a lot of downs, and you're very comfortable with that. I'm obviously like in a different level of risk tolerance for that, but I think that also depends on what kind of capital maybe like Chris Camillo, like you came out and you had a banger in the beginning where you were able to sizably bring in a large amount of capital that removes some of that fear. Cause I feel like that happens to a lot of these guys where like GameStop or like it's their first real time getting into the markets, or they're 3 years in and they finally have that banger trade that crushes out like $1 million or whatever for them in a level where they're like, okay, I'm set with this amount of capital. Now I can go take on, and I'm used to this and I can continue this risk way of investing. Because like I said, if I were to take on that trade and it dumped my portfolio by 50% tomorrow, I would feel absolutely detrimented if it wasn't some like global market event where I'm holding like an ETF where I know that this isn't just me, it is the markets that are doing this and I don't care. But if it is just me owning one stock and that stock materially black swans for whatever the management does and I'm down 50%, like I don't know if I could emotionally recover from that, because like we just don't have that kind of net worth behind us for me to be able to let me throw $1 million or half my portfolio in it, knowing that I have another $1 million backing, like, my assets, like my property, my family, whatever. So I think it depends on what level of wealth you're at. For me personally, to look at that kind of risk. So like I have to justify what I'm doing within again, that path of least resistance where I'm not going to detriment the future benefit of my family. Which I think, I always feel like there's two kind of people that I look at like you. There's the people that, again, that are set up, that are there, that can pull this stuff off. And then the people that want to be where you are, but they take on like dumbfounded risk. And you see them on Wall Street Bets. Like, again, for every one of you, I think there's 99 that bankrupt themselves. They just didn't do it in a way that accretively worked out. And I live on Wall Street Bets. Like I grew up in stock twits, the most toxic shit ever, long before like there was YouTube and like a pre way of getting into this and actually learning a correct way of investing. So I grew up in a very toxic realm, only buying individual stocks and just like you, finding some crazy bangers in the beginning. But again, for every one of us, I still see like 98 of them that'll fail miserably trying to do very similar stuff. And accretively, like I think I'm able to take on more risk than the average investor is, just because of the scope and scale that I've been able to grow. But I don't think I'm to the level where you guys are at, where I'd be comfortable. I think it's really like interperspective question you have to ask yourself. I mean, there's YouTubers out there that literally see their portfolios go to zero every day and then they'll rally back up to $1 million just because there's a lot of live streamers I watch right now that do that with gambling. Like, I don't know. I don't know. Maybe you can give me some perspective on how you ended up in this position.
Well, but I don't want to. Some people say, why don't you share your portfolio? I don't want to share my portfolio with people for this reason. For this reason, yeah, exactly. like first of all, it's none of your business how much I have in what, and also you don't want to do what I do, because everybody should be comfortable, where they are in life, and also, like we have different experiences in life. Maybe I am more. I take more risks too much for other people's tastes, but if you look at my life, like I never had a steady paycheck. I never had salary, insurance, never, like 1 year out of the last 30 or something. And there were numerous times where I lost my job. I lost my 90% of my income, boom, like this. So like so many of these things I experienced, it's like it's a normal way of living for me. This uncertainty. It's not that I seek it, but it's the life brought it upon me so many times that I learned how to live like this. I learned how to structure my life so that when these bumps happen, I can still survive. But at the end of the day, when I don't know what that number is, but when I reach a certain number, absolutely I want to diversify more into safer places, in many more places, many different assets. But I don't feel like I'm there yet. But I want to do that eventually. But one of the things that I wanted to ask you also is, when we started the Aduro journey, I mean, you learned about Aduro either from me or from Ryan, but like it came from my network. At first, you were talking about Aduro, but you weren't sold on Aduro, and it was visible in the way you were talking about it. But then something changed, and you built the position, and your conviction changed. And I was wondering what that was that made that switch.
yeah, this is still a complicated question because I'm sold on it, but I'm still not like 100. I'm very very milestone driven person, and I mean, there's a few companies we work with now where I really enjoy the management because I can see the direction they're going in, and I think sometimes you're really betting on those people as well. And I've had time to absorb what they've been doing, and I've been absorbing their philosophy, which I believe they believe to their core. Or, I don't know what their timelines are on some of their shares similar to yours, but I have a hard time believing that they're willing to just jump out of this. I don't think these guys are just kind of in it to get out on the first, 300 or 400x rally that it's been on. I think these guys will be here, seeing this through for some time. That gives me a lot more conviction in the company. I still want to see a lot of execution. Like, I'm still looking at the executional risk and making sure they're on top of that. But again, like, I mean, it's the same with all small caps. And I think people have to understand, like, the biggest wins I've ever had in small caps didn't happen. Like, I just looked at the company once and bought it. I think a lot of people watch YouTubers and a few days later they're super hyped about these companies and buy into them, and sometimes they work and sometimes they don't. It can take me years sometimes before like I would be on board with like allocating to a substantial way in a company like that. But I mean, the same thing happened with Canopy Growth Corp. That was a bit of an easier decision because it was leading up to a catalyst of legalization. But same with MindMed and some of these other companies. Like MindMed was a company I think I followed for a year, watching just to seeing how they were operating. I saw Kevin O'Leary get on board. I saw a bunch of stuff happen before I scaled that position, and luckily I did before the absolute like meteoric run that it went on in 2022. But again, then that leads to other questions of when do you get out and what do you want to do with the position at that point. So yeah, I mean, we're right in this mid phase right now where I think Aduro is in a super sweet spot for me personally, where I'm happy holding some shares. But I wouldn't mind rolling back a little bit too, because I wanted to point out a few things that you mentioned there. I mean, there's so much that I could build off of what you said there when it just comes to looking at when you get to your numbers and whatever. But I'm curious too, because you're a high net worth or a high net income earner too, right? I mean, I'm in a position now that I've never been in through most of my life. I was a lot more diligent from the investing front, but now I'm at this level where I'm kind of looking at the risk from two aspects of I have a higher net income than I've had throughout my entire life. Like, I'm earning more sometimes in months than I would have in years. And it gives me a little bit more. So I'm looking at it from a timeline of like my number set probably isn't as large as yours because I'm looking at the real estate that we own. Like, what does it take for me to comfortably like secure my family in a sense? And it's not as much as most people might think. Like, I'm very happy with a lot less than maybe other people out there, maybe like 1.5 million, 2 million, which I'm very closely knocking on that door anyways. And then from there, I'm probably going to alleviate back in another way. Like, I just thought it was funny how you said if I get to this number, then I would just allocate everything away. I'm looking at it as, okay, my number's pretty low. I want to get to that number in a respectable way without over crazy leveraging into stuff. And then past there, I don't even want to look at it anymore. Like, I think I've used my YouTube as like this journey of like, hey, anybody can do this. Like, it's not rocket science. It's just anyone can become a millionaire, but most people don't have the patience to do so. It's not like the path is that hard. It's just the patience required behind it doesn't happen overnight for most people. The vast majority of millionaires takes 10 to 20 years. But from there, like, the compounding does all the work for you. And I don't want to be this guy that's just focused on money. I think it's kind of a ridiculous virtue to be like, oh, look at how fast I'm growing. Look at my portfolio. Look at all this shit. I don't care about that. Like, I just want to reach enough that I think is securing my family. And then from there, I just want to focus on stories where my interest is. Don't care about how much of the position sizing it is. Like, that's kind of like my breakaway for me, where I could be like, oh, like, I love Aduro. I find a company I love. Like, I can allocate more to it and not think about what the actual position sizing is because I have that set up behind me already. And I'm sure that is the same for a lot of people. Is just, I don't know what your family dynamic looks like or any of that, but there's so much consideration of like income, like what's that income level, how fast you're going to get there with just that alone, what kind of risk you're comfortable taking on through that growth. Like, you're protecting family. Do you have kids? Do you have this or that? So I just thought that was an interesting, just something that you said there that really stuck out to me. But I mean, are you willing to share a number? Are you one of these like 10, $20 million kind of a guys? Because I feel like I'm doing it backwards. I just want to get to like 1.5 million, 2 million, pays the real estate off, secure portfolio for long-term retirement. I'm 33. I'm very privileged to be in this position as it is. But from there, I'm like, the exponential is endless because I can take on more risk than I think I could be now, just for my own tolerance and how I feel my personal journey is. But for you, I feel like, because I feel like we come from similar backgrounds. Like, I was self-employed, a lot of risk, job loss, all this.
I
But I
mean,
feel like,
it's really simple. Like 10x from here, and then I'll probably sell a quarter of my position.
a
But
quarter.
I'm very likely would it be that I would sell everything, because this is a
Yeah.
company where I want to hold like 10, 20 years, unless of course they get bought out. But I also look at it from the point of view, 10 times from here, it's going to be only 3 billion market cap. It's nothing. We should be there today.
No, I agree. I agree.
Like
So that's
and we're just starting on that, money expansion. And as you said, they didn't even cut interest rates yet.
so what's your pyramid built off of? Is Aduro like the top of your like number one list right now for stocks?
Yeah, I mean it's grown into that, you know. Yeah, but
Yeah.
I don't really, I don't really. I
But
think
even regardless of
I don't
growth, is
really
it still,
trade that much. Like I think I don't remember last time I made a trade. It could have been a year. Because you remember I lost my brokerage accounts. You know
oh
what?
yeah.
You know when I made last trade was when I had to exercise my Aduro warrants, which was I think for the April. So I had to sell some Aduro to exercise my warrants. That was the last trade. The prior trade before that could have been like 12 months ago, because I still don't have a brokerage account. Like it's ridiculous, but like just because I'm talking about these small cap stocks on my YouTube channel, the brokerages don't want to give me an account.
Yeah, what brokerages did you say those were again? What ones were you trading
Well,
with?
okay, so I lost an account with Interactive Brokers. Uh, Never gave me a reason. Just we're closing it. Okay. Then I transferred my stocks to Fidelity. Fidelity closed my account within 2 hours of opening it, so I couldn't even do anything illegal. They just closed it because I'm probably on some international fugitive list. I don't know. Again, no reason. Then Haywood Securities from Canada told me we're not opening you an account because you have a YouTube channel and you can pump and dump stocks. So I couldn't even do anything illegal. They refused me. Canaccord closed my account. Never told me a reason. And I told my broker, I'm like, look, the entire year I made one trade and you're closing my account. What something illegal did I do? One trade the whole freaking year and you're closing my account. Somebody from up top. It was a decision from up top. Like seriously, I'm a freaking criminal without even knowing what I committed.
Yeah, I feel like you should come to the big Canadian banks. They're the worst. I mean, when I set up my corporate investment account, I remember the financial lady. I won't mention names, but when I told her what I did for my job, she very openly said, "Well, if you get news, why not trade off of it?" And I was like, "Isn't that illegal?" And she's just like, "Well, in small amounts, you got to look at like the governments here don't care because they want to go get the big money. Like you got to think they have an allocated budget toward going after people doing this, and they want to get someone that's doing this like making 5 or 10 million. If you're just making low six figures or in the single digit range, no one's going to care." And I was like, this is the bank
No,
advisor telling
this is crazy. Like this is
and
this
like
is
you,
like this would be the craziest idea for us to do. Like because we're
I
so
agree.
out there public. Like this is a
I agree.
suicide. Like you think I'm gonna and in this space, when you talk with management and you visit companies, you always hear things that you're not supposed to know. You always, it's just normal. But
But like
but
you,
like
we're
you
in a
can't don't trade on it.
yeah. I said this from day one too. I'm like, I get paid well enough. Why be greedy? I don't need to be the Wolf of Wall Street. I mean, obviously, like we have non-disclosures, and you could be selling that to third parties on the black web. There's so many websites that'll accept, insider information where if the trade works out, they give you a sizable position. Like there's so many. I've seen it all just like you, but it's just not worth it.
Hmm.
I mean, if you're privileged enough to be in a position, to be making the money you're making, like why be greedy? It's like
Right.
you want to risk all of that. That's what I always told the wife. I'm like, if I ever get called to court, there's nothing I've done where they can come after me, and you can't hide any of it. Like you said, it's all in public accounts. So if you do it and eventually someone calls you out or you get caught, there's no hiding it. Like you can't work around it because it's
And
it's
one
public.
time I had a situation where the regulator was questioning me, and they sent me this list of questions, and I got on the phone with them, and they said, "What is your account number with a particular broker?" And I said, "Here it is. Look at it, and come back to me if I did anything wrong." After I gave them the bank account, never heard from them again. Never. Like, go and knock yourself out. Go and knock yourself out. Look for illegalities that don't exist. Go ahead.
I figured they love people like you though, man. Like, I mean, they want to make money, and the best money to be made is off, a lot of these smaller cap companies, the trading activity that comes with that, I figure you'd be their best friend. I mean, nowadays, especially here in the United States, where basically insider trading is legal. I mean, if you ever got called out now, I don't think you'd end up in jail for it, because you could just, you know, unless you're like really dumb and they just give you a piece of news the night before and then you trade it and you're working for the company. I mean, that would be absolutely stupid. But considering Trump's literally telling you when to buy stocks and the next day they're skyrocketing. Like,
Yeah, but you know what? You know what Interactive Brokers told me, that if my account is $5 million, I can have it back. Like,
oh, really?
yeah, yeah. So but like, my Aduro position is not at that level yet. But let's say this doubles, and my position is $6 million. Do you think I'm going to go back to Interactive Brokers and say, you know what? Now it's more than 5 million. Can I have my account back? No.
The competitive landscape in brokerage accounts is crazy right now too. I'm surprised the banks have been getting away with commissions as long as they have. I mean, I signed up to Moomoo and I started doing a thing with them, but they're coming up. There's Webull, there's, I mean, Robinhood's a bit OG, but these ones have really started to branch into Canada. And I'm just shocked at like the level of competition that's coming in. So I'm sure you can bounce around between these guys, and I'm sure any of them would gladly take your money at this rate, considering how bad
Yeah.
they're trying to convert clients.
Yeah.
So not too much to worry about in that sense, but I don't know if I mean, it doesn't really matter, but
Yeah. No, it doesn't.
I
Right
think
now, it
it's
doesn't
fun.
matter. But well, let's. With that being said, let's finish it up. Do you have any final thoughts for my listeners that you'd like to share?
Yeah, your audience, like my audience, I think it's one of the most beautiful things on YouTube, because you don't have to deal with a lot of the BS. But I know I always see a lot of people that are still losing money out there, and I feel like they're the ones that'll never speak up. So I feel horrible for them, and I'm hoping they're taking this as an education piece to figure out what their own time horizons are, risk tolerance, and allocating correctly. And you can find great stocks on YouTube, but I always just say, man, like, go in with a plan. If you're doing what we're doing, make sure you understand what you're doing to the highest level of strategy, because I think a lot of people just blindly buy these and think they're going to hold on to them like you for 5 or 10 years, but don't pay attention to management, market condition changing, like what are they hitting their milestones. Like, you got to hold these companies accountable, and I think that's what people need to recognize. Anytime you buy an individual stock, like you have to have some kind of accountability toward it. So if you accept a loss, I mean, you have to be willing to understand that that was the risk that you took on. So make sure you're doing it correctly, because I don't know how people are losing money in a market environment like this. I mean, it's pretty hard to lose money unless you're absolutely degenerate. And if you are one of those degenerates, figure out what you're doing and fix it.
No, I mean, it is easy to lose money right now in the microcap space when the management doesn't perform.
Yeah, but again, that's holding accountability and allocating the risk
Yeah.
correctly, right? Like, I mean, like you, I work with a lot of these companies and I see it every day. And there's companies that especially on YouTube with sponsors, I do, I don't mind talking to companies and getting an idea for them, but because I try and be as transparent as possible, so people understand like what I'm holding, what I'm not holding. I don't tend to disclose like my crypto or a lot of my small caps for the same reason you do, because I just don't want people trading off of that. Considering I do take profits, sometimes I trade them around, and I just don't want to have to deal with scrutiny from regulators and stuff like that. So I'd rather keep it a bit more private. But again, like, that's why I'd rather people again understand the risk they're taking, and hold the accountability, and make sure there's a lot more risk. And like you said, 9 out of 10 of these companies, or like we were saying, won't work out to that aspect. So you really want to make sure you're narrowing down the ones that are, and paying more attention, and watering the flowers when they're starting to bear fruit. Because it'll be, I don't know, we'll come back in a year and we'll see where Aduro's at, and I'm sure this conversation will be ever more interesting, or even 6 months from now, let's say, end of the
Yeah.
year.
Yeah. All right.
See where
Cool. Well,
we're at.
thanks for doing this.
Yeah, no, pleasure, man. I appreciate you bringing me on. Stay cool.